Welcome students, Tom Harmer here, your accounting professor, and this is going to be a PowerPoint presentation on the comparison of business entities. We are going to compare and contrast the four types of business entities. Sole proprietorships were covered in chapters 1 through 9 in our textbook. And there was really no discussion of the various entities that were out there as other options, but we just learned accounting from the perspective of a sole proprietorship. Chapter 12, we went into partnerships and limited liability companies, and then here in chapter 13, we're going into corporations, and we've covered those. And in the chapter 12, it did cover the characteristics of a partnership and the characteristics of a limited liability company, and in 13, of course, the characteristics of a corporation. After we've covered all of these different business entities, then in this PowerPoint, and also I have it listed in Canvas, you have an online research assignment given in slides 17 and 18. So here we are. What is a sole proprietorship? It's a business entity owned by one person who is legally responsible for the debts and the taxes of the business. The person is responsible, not the business entity, for a sole proprietorship. When you license a sole proprietorship, it costs you like $40. It's just the license to do business in the name of that business. All your property and all your debts and obligations are in the sole proprietor's personal name. So here we are comparing the sole proprietorship to a partnership and corporation. It's a one owner. Life. It ends when the owner is unable to carry on, dies, or closes the business. And the responsibility for the debts, if the firm is unable to pay, that's the owner. The owner has to pay all the debts of the business. Okay, then we go here to what's a partnership. It's a business entity, once again, owned by two or more people who are legally responsible for the debts and taxes of the business. So again, it's the people that are responsible, not the business. When you get a license with the state of Washington for a partnership, it's just a name that you can do business under, but the bottom line is the partners are responsible for those debts. Okay, so it's the partnership, two or more owners, ends when any partner withdraws from the business, dies, or closes the firm. So, that's a problem. If a partner dies, then, and let's say there was $100,000 of equity in this partnership, don't you think that the partner's wife or husband and his children would be interested in their father's or mom's equity in the partnership? Right. You're going to end up going to court to settle that, depending on the partnership agreement. So when one partner dies or withdraws, then you're doing an accounting, you're reassessing the value of all the assets, and it's complicated. Okay, and we covered in chapter 12 liquidating the partnership. Okay, who's responsible for the debts of the firm? The partners are. They're both individually and jointly liable. So if you have two partners, one of them is married with 3 kids, and the other one is single and has no particular local obligations, and you have $100,000 of debt, and you're 50-50 partners, and the business goes broke and quits business, the single guy, well, he can pick up and go to Mexico. And guess what? The married family, that's the other partner, gets to pay the $100,000 debt. Of course, they can file suit and get a judgment against the partner that left the state, but if the partner never comes back, they're probably not going to get it. So partnerships can be a little ugly. Okay, so now we go on here to typical partnerships, and this is showing medical practice, dental practices, architectural firms, accounting firms, law firms. These were typical partnerships for years and years until in 1970, or right in there, most of the states passed legislation and legalized and created another business entity called LLCs. And another version of that is limited liability partnerships. So as soon as this business entity came into existence, then all of the various partnerships went to that because it protected the individual partners from lawsuits and debts of the business. But we'll talk more about those later. Right now we're talking partnerships. Okay, so then we move on from there. In a partnership, the partners have to agree on who will contribute how much money to the partnership. They must agree upon that, the percentage ownership that each partner has in the partnership, the share of profits and losses that each partner gets, compensation to each partner before dividing the profits, duties of each partner to perform, and the debts and responsibility of each partner has for the partnership debts. However, you might have an agreement on certain things, but the bottom line is, if creditors are suing, they're going to sue all the partners. Okay? This also requires a partnership agreement, which requires an attorney's assistance. Tax returns should be done by a tax specialist because partnership tax returns are a challenge, just like LLCs and just like corporations. We'll talk on that later. Okay. So here we go. Now the next one is corporation. Corporation is a publicly or privately owned business entity that is separate from its owners and has a legal right to own property and to do business in its own name. Stockholders are not responsible for the debts or the taxes of the business. Now, a corporation can be simple to set up, one owner corporation. But doing the tax returns and maintaining the accounting for a corporation is more complicated, and you're going to have CPA to do those corporate tax returns. Okay, so here we go. Corporation ownership can be by the thousands. Now, as I mentioned, a corporation can be set up by one person, and so in that case, you don't even have to issue stock when you have a one-owner corporation. And so a person that, we'll talk more about those characteristics later, but about the benefits of having a corporate structure just for one person. And in fact, most corporate business entities are one owner because it's just all kinds of small business people around will set up a one owner corporation for reasons we'll talk about later. Okay? So the life of a corporation is it continues indefinitely and ends only when the business, the life of the corporation continues indefinitely, and it only ends when the stockholders vote to liquidate. Responsibility for business debts, if the firm is unable to pay, the stockholders can only lose the amount that they invested in their stock. This is called limited liability protection, which is a primary purpose of incorporating. Beyond that, if the corporation has lawsuits and damages against it that amount to millions, they can't go after the stockholders. What is stock? Stock is issued in the form of stock certificates and represents the ownership of the corporation. However, when you form a one-owner corporation, you don't have to have stock. But stock is a great tool for raising funds for the corporation for doing business and setting up business, because you can sell them in small numeric values and give them a percentage of the profits of the corporation. Important distinction. For accounting purposes, all forms of business entities are considered separate entities. However, a corporation and a limited liability company are the only form of business that are actual separate legal entities. So we're talking about business entities versus legal entities. So in the Supreme Court in 1819, there was a lawsuit between the state of Delaware and the college in that state. It was wanting to take over the college because it was, becoming very popular and having a lot of revenue. And so here the Supreme Court says a corporation is an artificial being, invisible, intangible, and existing only in the contemplation of the law. It possesses only those properties which the charter of its creation confers upon it. But it is no more a state instrument than a natural person exercising the same powers would be. So it's like an individual, except for one thing: it can't vote. Okay? It was concluded that by the Chief Justice that the opinion of the court after mature deliberation that this is a contract the obligation of which cannot be impaired without violating the Constitution of the United States. So this was 1819. The Industrial Revolution kicked into gear in 1865, and this corporate structure allowed people to invest their money in corporations without worrying about the business going broke and creditors coming after their personal residences and things like that. So here we go. Here's a comparison of the four forms here. We got our partnership, our sole proprietorship, partnership, corporation, LLC. An LLC, as I mentioned before, these types of business entities came into being in the 70s. And as you see, when we do a little bit more study into the characteristics of an LLC, you'll see why they are popular. They're simpler to set up, simpler to maintain, the accounting's easier. But owners in the LLC are called members. Life of the organization, like a corporation, it's indefinite. It's a legal entity, a legal business entity. Liability of owners for the debts of the business, members are not personally liable. They can only lose what they invested in the LLC. And with LLCs, also many LLCs are just one owner LLCs. It's simple to set up and maintain. And tax returns can be done with TurboTax because you're doing the Schedule C for an individual. And if it's a partnership, you're going to have a CPA doing those partnership returns. And by the way, the LLC has an option for converting to a subchapter S corporation for tax reporting purposes. Just a comment. Online comparison. I have links in this PowerPoint. Let's just take a look at one here. We click on that guy and boom. Let's see if she goes. Pair business structures. This is the state of Washington business licensing service. Filing requirements, difficulty of forming a business, who has liability, legal and operational requirements. So this is a lot more detail than we're covering in the book. But we've got our business, all of our different business structures and the criteria and the characteristics, comparing them. Okay, with that we'll go back to our PowerPoint. And there we go. Okay. When should you register for a business license? Well, you think, well, I'd want to do that when I want to get into business. Well, in fact, because there's some practical reasons to register for a business now rather than later. Because if you're an individual and you want to qualify for a home mortgage down the road, then the lender is going to require that you be self-employed for 2 years before they're going to accept any of the revenue and income from that business. So if you set up a business now, that starts the clock ticking. Maybe you don't actually start the business for a year and a half, but that last 6 months of the second year, you bring in $100,000 in net profit. You want to go get a home or some other investment where you need financing. If you set up your company now, then that starts the clock ticking, and then you can use that income after 2 years. How and where do you license for a business? Sole proprietor. So I've provided the links here that you can go to get a license for sole proprietor or partnership, like $40. You can do it in about 10 or 15 minutes. Similar for a corporation or an LLC, but depending on if you're doing a single owner, that's pretty simple. I have more information on that. And for getting your EIN number, you want to have that in any case because it's like your Social Security number for your business, and when you're applying for credit for your business, they want that EIN number. Okay, so let's move on here. Reasons to have a corporation or an LLC business entity. Well, you do it to protect your personal assets from lawsuits originating from having employees, having a business which has risks of damage suits. In other words, say you're a painting contractor. When one of your employees could spill paint on the property that you're painting and cause damage, or they could drop a can of paint on the owner's head and then have a damage suit there. You don't want that owner to be able to get past your business assets and get your personal residence. So owner wants a business entity to continue after his or her death. Well, you set up an LLC or a corporation to do that. when you have children and heirs, these become significant, important issues. So they can be part of estate planning purposes, and they also provide stability for the employees. Corporate structure will convert earned income, which has like W-2 income, which has reported your net income on your Schedule C, will be what they would be calling the earned income. But in a corporate structure, you can pay yourself a W-2 wage and pay yourself a low wage, and then have the profit paid in dividends, and the dividends are not taxable for Social Security and Medicare. So if you pay yourself $17,000 a year in your wage or your salary, and you have $100,000 in net profit beyond that, you're saving $15,000 in Social Security and Medicare. And there's a lot of high production earners that set up a sub-S corporation and launder their income through the corporate structure to save that Social Security Medicare tax. Okay, credit cards and loans in the corporation or LLC name won't show on your personal credit. Obtaining cash and working capital most easily in corporations. Corporations have those, you can have thousands of shares of stock and be selling them for $10 a share, and so many people can afford that. You can raise money in small increments like that. Distribution of net income most easily through corporations because it's prorated by the number of shares each person owns. So now here's the assignment. You're going to print the business entity reports from the Washington State the Small Business Administration. Okay, so I give you a link here. You're going to go to that link, click on Apply to State Business Licenses. So I'm giving you all the links in this particular form that you're going to be clicking through until you get down to this Washington Business and Organization Structure Considerations. And this is a whole page. It's a one-page document. Get a screenshot of it and paste it in a Word document and save it, last name, first name, entity comparison.doc, and that will be submitted in Canvas under this assignment. Then the next document is, here's instructions on how to go find it, and this is going to be last name, first name, entity details. And so you're going to have a separate page for each one of these business entities. And this is going to be, you're going to be creating in the assignment a document that will be valuable to you, because you will have all the details of the benefits and issues related to each one of these types of business entities. And I mentioned here suggestion for creating, well, not screenshots, because what you're going to do is you're going to just copy it. You go to the bottom of the report in the website and you click and hold your left mouse button and then drag and highlight all the way to the first word of the report. Then you hit, so you've highlighted the whole report, you do a Control-C, then you go to a blank Word document and click on it and do a Control-V for paste, and it'll paste right into that Word document, and then you save it in this name right here. Now you can have each one of these documents as a separate page in one document, and I guess that's the way I have assigned it here. One document with a page for each one of these in it. Okay, so just to review here, you have assignment. Do the entity assignment in this PowerPoint, slides 17 and 18. Submit the 2 Word documents. There's the names of them. Also, the instructions for this are also in Canvas. And then prepare, you're going to review, and I'm going to take you to this next, is a more extensive comparison Excel worksheet on all these business entities. So you're going to be studying that and practicing and get ready for a quiz in Excel on business entities. So let's go take a look at that. So here's a look at this extended comparison of business entities, which is in a quiz format. So based on what I've just discussed and presented in the PowerPoint, you can answer all of these questions. Let's see, what are the relative legal requirements of this type of business entity? We didn't discuss that with very much, but bottom line is the legal requirements of a sole proprietorship are just minimal. You just go online, set up your business name, and you're in business. But you're personally liable for for any damage, any debts. Partnerships, similar, except that you have your partnership agreement, which can end up being quite a litigious situation, especially if there's losses or somebody dies. Okay. Let's see, some formal requirements, but less than a corporation. Well, that's referring to your LLC. It gives you limited liability protection, and it is easier to set up and easier to maintain the accounting for, and so that's the LLC. The board of directors and annual meetings and annual reporting are required. Well, that's for a corporation. You see, where for an LLC, it doesn't require that you have board of directors meetings and maintain a board of directors notes of all these meetings. A corporate veil can be pierced for a corporation if they don't have annual corporate meetings, and if they're stockholders, if they don't invite them all to the meeting. Stockholder not invited can sue for the liquidation of the corporation for having not been invited to a corporate meeting. So there's those issues where the LLC doesn't have that. Okay, members have an operating agreement that defines who manages. Okay, well, it says members, so you know that's an LLC. By directors who are elected by the shareholders who hire, choose officers, and run the business. That's corporation. Each partner has equal authority unless otherwise stated in the partnership agreement. Well, that's obviously a partnership. Owner has full control. Okay, well, that's a sole proprietorship. Okay, now if you had a one-owner corporation, you'd have full control. And if you had a one-owner LLC, you'd have full control. Okay, and you can start a business as the sole proprietor, and then you could then you can convert it to an LLC, and then you can convert that to a corporation. So you can move through these various entities. Who pays the federal income tax on profits? The entity pays the income tax. Well, that would be the corporation. No tax at the entity level. Okay, that is the LLC, and that is a sole proprietorship, and that's a partnership, because none of those entities, even though the LLC is a separate legal entity, it is a pass-through entity for all earned income, and that's one of the great advantages over a corporation, where a corporation can be double taxed. I mean, they tax net income in a corporation at 35%. So then if you're paying dividends after that, then you're paying your personal income tax on those dividends. There is a version called Subchapter S Corporation where up to 80, you can't have over a certain number of shareholders, and you qualify for the pass-through on a corporation. Okay, and the corporation offers that laundering of earned income to avoid that self-employment tax, where an LLC does not. All the net earnings from an LLC are going to be going to earned income, where in a corporation it converts it to passive income. Okay? Which entities require professional accountants to do the tax return? Assume the LLC and the corporation only have one owner. Okay? So you've got TurboTax can be used for the sole proprietorship. TurboTax does have a partnership return, but they involve a balance sheet and at the beginning of the year, at the end of the year, and it's a challenge. You just need an accountant to help you with that. Of course, unless you continue in accounting and become one yourself. As I've said before, after this class, you students will know whether you want to be an accountant or hire one. Okay, so corporation over here, again, that is going to be the most complicated. You're going to want to hire an accountant for that. Single owner corporation, you're going to still want an accountant helping you on that. Single owner LLC, that's just exactly like if you were a sole proprietorship. That's a Schedule C attached to your 1040. So, a single owner LLC is, it just gives you limited liability protection, but really it allows you to act as if do all your accounting as if you're a sole proprietor. Now down here I have provided these links. Okay, link to license this type of business entity in Washington State begins with creating the username and password. So if you click on these, for setting up a partnership, a sole proprietorship, corporation, or LLC. It'll take you right to the location in the Washington State licensing websites. Told you where these links are, but here's another way to get there. But you got to be sure to be at the right place. Link to Washington Department of Licensing, explanation of properties, advantages and disadvantages of business entities, comparison format, okay, So there you go. Now, by the way, just a quick little peek here. It says here, instructions: enter the numbers given under the possible answers that apply to that type of entity, okay? And so you're going to have, in several of these, you're going to have several answers as you go down. So that'll be the quiz that you're going to have. You just need to know the characteristics of each one of these business entities. So there you go. There's the presentation and comparison of business entities. Review that video. The PowerPoint is also provided in Canvas, perhaps in the assignment page, but I know that I'll have it over there in the files section. So thank you very much and best regards.